In 2024, Stripe processed over 1.4 trillion in global payment volume. The entire stablecoin market cap today stands around $250 billion. That means one single company processed 5 times that amount in a single year. And and all of that within an extremely, what am I doing? Okay. And all of that using an inferior payment technology. The because take a look at the legacy rails that we have in the Visa,
Mhm.
Swift, ACH. These are all closed, expensive, slow. The cross border payments suffer the most actually, with extremely high remittance fees, multiple intermediaries, long settlement times. And most of the fintech innovations that we have seen in the last 10 to 15 years, this has mostly just been like UI UX sugar
Just a
layered on
prettier
some.
app.
Yes, yes, exactly. Just a prettier app with the same back-end issues that there was 15, 20 years ago. So the idea that that stable coins could be a true back-end upgrade is not just like a fantasy, or just not just something that was theoretically being discussed in the last a few years ago, but it's today. Right now, we are looking at something that is actually feasible and actually doable, and that's why we are
Right.
looking at so many companies that are announcing different types of stablecoin trial programs. They're partnering with stablecoin companies. They're partnering with native crypto programs, just to tap into this new technology that is obviously blockchain, and the features that it brings with it, like extremely fast settlement speed, no cross-border restrictions. You can pay whoever you want, whenever you want,
The
instantly,
transaction
right?
fees are also lower.
Oh yeah, like extremely low transaction fee. It's almost non negligible in most of the layer two blockchains. So what I want to do in this episode is take a look at all the companies that have made some sort of an announcement or taken some initiatives to increase their footprints in the stablecoin world. And another more important thing to note is that in some of the cases, or even like whenever a technology is hyped, what happens is all of this noise comes in, all of these platforms that has nothing to do with stable coins, or has very little compatibility or very little technology to offer to stable coins, or a product that actually matters. They will simply come in and jump on the bandwagon and try to
Right.
get a payday out of this. So I want to specifically look at fintech platforms that actually has the potential, that is the signal from all of these noises. So what we want to do today is separate the signal from the noise. We want to actually look at companies with high impact and with feasible and reasonable potential to influence the stablecoin economy of the future, essentially. So let me actually share a few data with you.
Hmm.
Okay, so this is I was working on this KPI scorecard. Just this is to separate the high signals, the medium signals, and what is likely noise over the last few days that we have been seeing these announcements coming in. Not last few days, last few months actually. We are more and more companies are coming in and using stablecoin rails over the last 2 3 years, starting from, I think the major introduction of legacy rails that happened was through PayPal and
Hmm.
through actually Visa's network. Yeah, so PayPal obviously, as you know, has their own stable coin, which is the PYUSD, and
PYUSD.
yeah, it has a total market cap of about $950 million, which is obviously a significant amount. It's nowhere near where USDC or USDT is, but it's definitely
Hmm.
something that you take them seriously from now on. Right. So PayPal has been working diligently. They have got like a 434 million plus wallets, and they already 36 million plus merchants are using PayPal USD in some way or another. So they have the largest consumer wallet footprint with native stable coin technology. So yeah, they are definitely high signal that I'm looking at. Stripe is another huge example, because like the eligible merchants that I couldn't even figure out the total number, so I just put like millions because
Ah.
that's the case. And fees and car fee. If you look at the fees for stable coins versus cards, The fees that we are looking at on stablecoins is about 1.5%, whereas the cards is like literally double that amount. So you lose
Right.
3% of your entire transaction volume in cards, and hopefully that amount comes like gets lower and lower by the time like stablecoin is completely adopted in the business world, right? And they are using a lot of like they're pretty much available on most of the major chains, including Ethereum, Solana, and
I'm
Base.
curious as to why do you say that when stablecoin do become mainstream, the transaction fees will lower?
Because these transaction fees are arbitrary, right? These are like the transaction fee is a fee that Stripe is charging you for their services. Like when you introduce more competition to the market, the transaction fee automatically goes lower because they want to remain
I
competitive,
see.
right? Yeah, so it's essentially the free market at work with supply and demand economics. Yeah, so I will actually do a deep dive in Stripe and MoneyGram in the next section. Actually, let's just take a quick overview of what we are looking at on the MoneyGram side. They are actually natively partnered with Stellar, so they use the Stellar blockchain to do their USDC transactions, and they have so far done about 30 million or more in
Hmm.
transaction over the last 2 years, which is obviously not a lot, but at the same time, these transactions are going to countries like South America, North Africa, places like that, and mostly based on remittances. Because what's unique about MoneyGram is they have physical locations. Just like Western Union, MoneyGram has physical location where, like, if I send money from the US to a country in, let's say, Nigeria, as a native Nigerian who doesn't necessarily have access to all of the fintech technology that we have available today, you can simply go to one of their kiosks or one of their
I see.
branches and just withdraw your Nigerian naira in cash. And because you don't have access to the technology, you don't have a sophisticated enough financial infrastructure where you can just spend your money online, right? So that's where MoneyGram comes in. And then we have Nubank, obviously another huge player in the market with 55 million plus retail customers, right? And so yeah, and then the Nubank primarily operates in an extremely inflationary market. So that means we
Hmm.
have extensively discussed inflation in our previous episodes.
Right.
So you know the value of stable coins in a weak economy, unstable economy, and inflationary markets. So you want to hold on to your USD, you want to hold on to your stable coins there. That's why it's also actually on-chain enabled. So one of the differences between like, something like MoneyGram or something like Stripe is your stablecoin gets converted when when you receive it, and that's not good if you want to save in USD, right? Uh, some Because the entire point, or at least like one third of the entire point of using stablecoin is to save in USD and to beat the local inflationary currencies. So so
Hmm.
if you want to save in USD, Stripe does not allow. Stripe does not allow you to do that, but at the same time, the primary customer base for Stripe is the United States, so you are saving in USD. So that point is
Ah.
pretty much moot here right now. But once Stripe make these stablecoin transactions available outside of the United States, then the saving and storing in USD question comes into place. And actually, I have and and actually for that reason, Stripe has already made a few business decisions. So let me quickly go into that, but before that, yeah, so one more point that I want to discuss is Shopify, which they have already started accepting payments in stable coins, but they are doing it in partnership with Stripe. So yeah, pretty much from what we are looking at, all of these are extremely established fintech players, and they have already not only they have they announced their intention to play with stablecoins and enable users to access and transact in stablecoins, but they have already either launched their entire product suites or
Hmm.
have something available in trial stages where you can actually play with stablecoins. So these five are in my calculation. These five are all high signal with a lot of potential in the next coming years. And then we have
That's actually a very useful filter because sometimes things just blow out of proportions and things just have the hype, but there's no
yes.
depth behind them.
Yeah, exactly. I mean, some big company can come in and announce that they are integrating stablecoins. They are looking into it without no clear roadmap, no clear vision how exactly they're doing it. or whom they're hiring to do it.
Right.
So it just until specific information is released and you see some progress over 3 to 6 months, it's in my book that's just simply noise. So, and then we have some medium signal stuff, of which the most interesting one is Remitly. They actually announced just last week that they are integrating stablecoins, and they will be launching something by September of this year. Because the access they have in the globe is huge. As you can see here, 170 plus global corridors, with say 8.5 million active customers. So a huge player in the
Hmm.
market. And as I wrote here, if 2% flow comes on chain, that's pretty much like $100 million in 6 months. Um, Definitely bullish on Remitly doing something huge in the stablecoin space. And we also have Owner Freak, which is mostly in the Africa region. But again, the developing world with huge market access, 40 plus markets, 1 billion plus wallets connected. And they're already working on their pilots in 2025. Definitely interested to see how that works out. And Chipper Cash is another one. I don't have a lot of information in that, but I know that they have the right team behind it. They have got already 5 million customers and 9 countries. So hopefully they do something interesting, but I haven't seen a lot of information that makes me super bullish on them. But at the same time, since they have taken some actions,
Hmm.
I'm putting them in the medium signal category. And I actually had two
Ah.
likely noise sections for me. One was actually even on top before Western Union. I had Revolut. Revolut has made a lot of announcements that they are working on the like native stablecoin solutions and this and that, but I haven't seen like any proof of it. So I just
Hmm.
decided to entirely eliminate that from the list. And actually, the reason I'm using Western Union here, and I hopefully I'll be proven wrong, is because Western Union very recently announced that they are rolling out their stablecoin products, tools, whatever you want to call it. But I so far they haven't like said anything that is specific or remotely specific. No roadmap, no timelines, no specific timeline or what kind of product that they are going to launch. How exactly it's going to commingle or integrate with their existing product suite that they have. But there is no doubt that uh, Western Union's impact on stablecoin adoption will be huge if and when they go full out. Because as you can see here, they have got like 100 million plus users,
Yeah.
and it's not just Latin America where they intend to do the pilot. It's global reach. So yeah, super exciting. And at the same time, I want to be cautious and don't hype some projects up too much, because they have
Right.
simply announced that they are interested in stablecoins. However, that being said, I want to look into two specific projects or two specific companies that actually have done a lot of stuff in the stablecoin space and have actually rolled out products that makes that with proven financial numbers. Number one will be Stripe in our category. So, like Stripe is actually positioning itself as the core payment and identity infrastructure provider for the next wave of on-chain commerce. It's not just about creating a consumer-facing brand. And the strategy is to make stablecoin transactions as seamless as fiat for businesses. And the core products that they have is they started with USDC. Now
Hmm.
they will be integrating other stable coins as well, like euro stable coin. There's like the global stable coin, another one. Yeah, so let's take a look at some data on the Stripes front. Not even data, I just want to show you their docs, so we can get a bit more visibility on what exactly we have so far. So in terms of availability, their stablecoin solutions are all right now only available in US. And what they're
Hmm.
doing is, like, you can pretty much do the end-to-end transaction through stablecoins in Stripe if you are a US based business. So that means it includes pretty much all of the payment elements, checkout directly or through through APIs. You have got USDC, USDP, and USDG on. It's all of them are available on Ethereum. USDP is available on Solana, and you have got USDC on Polygon and Base as well. and customers are all global, but the originating business has to be US based, right? But couple more interesting things is they have put a transaction limit, because this is just something that is in
Very
a trial
initial, is it?
process. Come again?
That very initial, it's in the very initial stage.
Yeah, exactly. It's in the
That's the
very
limit.
initial stage. Yeah. So they're limiting $10,000 per customer and $100,000 per month. Oh, wait a minute. What does that mean? Transaction limits on end customers are $10,000 per transaction. Okay. So
So per
they will
transaction, they can only send $10,000, but within a month, the limit is $100,000. Is it?
yes, yes, that's it. And as we previously discussed, the pricing they're doing 1.5% uh, in transaction amount. Uh, so if you are transacting $100,000, you are paying 1,500 in fees, which is not bad, but it's too much to pay when you are using
Right.
stablecoins, right? So a couple of strategic things that Stripe has done that really puts them in front of the flock is actually two strategic acquisitions. So number one being Bridge. They bought Bridge for $1.1 billion in 2025, actually. And the Bridge allows Stripe to offer businesses the ability to create self-custodial wallets for their users.
What is that?
Self-custodial wallets, imagine like you are transacting in stable coins between, like, you have your own uh, you have your own vendors, you have your own, like, retail payments that you are doing. You are also receiving payments in stable coins, so you want to store
Mhm.
that stable coins in a decentralized way. You don't want to give the custody of your stable coins to Stripe directly, or at least their centralized
I
system,
see.
right? So this is a system that, this is basically a wallet storage system. And
Understood.
the other acquisition is of Privy. They bought about 75 million on-chain accounts into Stripe's ecosystem. Privy is actually another wallet service provider, and they had an existing 75 million on-chain accounts. So they basically brought them into their ecosystem. So these strategic acquisitions actually just goes to show how bullish they are and how confident they are in
Right.
their ability that they would be able to disrupt the stablecoin market. And because why not, right? Stripe is already probably, I'm not even probably, they are the biggest fintech platform in the world in terms of the amount of transaction volume they process in a single year, which is, as we started by saying, like $1.4 trillion.
Right.
That number is simply huge. And actually, like, in the stablecoin section itself, the number of active wallets on Stripe has grown from 1 million to 40 million in the last 2 years. So these numbers are huge. So yeah, so that was Stripe. Next, we have got MoneyGram. MoneyGram doesn't necessarily have as big of a footprint, as big of a financial footprint as Stripe, but they actually have a physical footprint in 170 plus countries. And as I was saying earlier, they have physical kiosks or physical branches in these
Mm-hmm.
countries where you can send money to someone, and they go and withdraw money like it's an ATM, right? It's just a cross-border remittance program with physical offices. But
And
what
am I
makes
correct in thinking that they're mostly in like third world countries because that's where the financial
Yes,
infrastructure isn't there?
yeah, exactly. I mean, the developing world needs financial infrastructure the most. If you weaker economies are non-sophisticated financial infrastructures, inflationary currencies, and also, like, most of these payments that MoneyGram is getting are remittances from migrant workers. So people that went to a different
Ah,
country to work and send money to their families, right? So the amount isn't huge. Like, there is no billions of dollars of transactions. It's just like a couple of $100 every month you send to your family, something like that.
understood.
Yeah. So what makes this physical chain of kiosks is actually what makes MoneyGram so interesting. So they have got like MoneyGram Ramp, which is the service that they built in partnership with Stellar. Stellar is a blockchain network that they are using to process all of these stablecoin transactions through USDC. Let me show you the process of how the on ramp and off ramp option works for MoneyGram that they are doing in partnership with Stellar. So it's actually, like, it's very simple. when you are cashing in, that means when you are sending cash, when you are converting cash into USDC, all you do is simply enter the amount you wish to add to your wallet, verify the details. You send a participating location. You will select the participating location, and then the transaction is finalized, and that's it. You had cash, now you have USDC. And very similarly, when you want to cash out, you simply open
Ah,
your wallet and select the amount of USDC that you want to cash out. You select the physical location where you want to cash it out of, and you go there and you pick up the cash. It's as simple as that.
it's almost almost sounds very similar to like Uber, where Uber, the car itself is the stable coin. It travels through the road, which is Stellar, and the OTP exchange is where the money gets exchanged,
Yeah,
like the money
yeah,
gets transferred.
that's an apt analogy. Yeah, that's exactly how it pretty much works, right? Now the problem here is inherently you are using the blockchain network to fast forward these transactions. Like previously, when you do cross border transactions, you have to go with like literally a dozen step before money reaches
Right.
from one bank account to another one. Stablecoin instantly eliminates this issue, but the problem still remains is that even though the delivery mechanism is stablecoin, the on-ramping and off-ramping options are still in fiat. So you eliminate the speed issue, you will eliminate the transaction fee by a lot. But what you don't do is it doesn't save you from the weaker currency troubles. So if we look at stablecoins as the primary solvers of three problems, number one being like faster, cheaper,
Hmm.
and also a hedge against weak economies. It solves the faster and cheaper problem. It does not solve the inflationary issues, because all of these most of these services convert your USDC or USDT into the local currency, and they hold on to that USDC. So yeah, I mean, 2 out of 3 is good.